Thanks for joining us. This is Westchester Advice Givers. I'm your host, Sean Dominski, and I'm here today with Ramsey Coulter from Coulter Credit. Ramsey is a credit repair specialist. He's helped over 1,000 people improve their credit, helps people finance houses, cars, both, all sorts of things that you're going to need a great credit score in order to move forward. He's a graduate of Westchester University, so local to the Westchester area. Ramsey, thanks for joining us.
Yeah, absolutely. Thanks for having me today, Sean. This is great.
Yeah.
I appreciate it.
So, first of all, let's just start with, why is a credit score so important?
Well, your credit score is used for a lot of things in life. People don't realize how much it is really used. They just think, well, I just need it to get a mortgage, or I just need my credit to get a car. They don't realize that a lot of jobs check your credit, depending on what type of industry it is. To be a police officer in Philly, they check your credit. To rank up in the military, they check your credit. They do background checks and security clearances. And part of that is, if you owe people money, you need to pay them. Your auto insurance rate is directly affected by your credit. Your homeowner's insurance rate is directly impacted by your credit for most companies. Hold on a second. Your credit score, that's not public knowledge. Can anyone just check the credit of someone else? No, not legally. They have to have what is called a permissible purpose under the Fair Credit Reporting Act. So you have to give them permission in writing. So
like when you go to apply for an apartment or a rental, you're going to, at some point, one of the papers that you sign as part of the application is giving them permission to check your credit. Now that landlord's going to check that credit score, and they can basically say yes or no based off of that number, and there's no specific number that they have to be looking for, right?
Correct. It's their own criteria. Some landlords or apartment complexes want you to have at least a minimum of a 600. Mm-hmm. Some I've heard of a 640. It's like, well, 640. If you have a 640 credit score, why would you be renting? Just to get a home.
Right.
But those high fancy ones, they can do what they want, and they can charge what they want. Yeah.
Right. Okay. So now, when it comes to financing, obviously credit score, that's what people think of your credit. Like you're saying, it's not. It's getting it's getting an apartment. It's getting a job. It's not just getting a loan. But when it comes to financing, are there credit? Is it just up to whoever is lending the money, or are there certain standards that?
Well, there's federal guidelines. Any loan officer will tell you that there's FHA, which is most first-time home buyers use FHA or USDA or VA loans.
And those are loans that are going to be sold to another organization. So when the lender first writes the loan, it has to fit certain criteria. Correct. So that's where they're
federally backed loans. So the government is guaranteeing them.
Right.
So the government says, well, the minimum credit score for most of these programs is a 580, which is very low. It's very easy to get a 580 in a matter of a couple of months, assuming you have at least some sort of credit. But 580 is usually the minimum. There are certain banks or mortgage companies who have their own standards, and they'll say, oh no, our FHA, we can't do below 620 or even 640. So people think that all banks and mortgages are the same, and that's absolutely not true. They're industry specific. They all have to follow federal guidelines, but they can set the bar as high as they want and set themselves apart.
Okay, so tell us a little about yourself and how you got here, and why you spent so much time building this expertise in such a not so fun area.
Right. Yeah, credit is not the most fun industry. It's a lot of people think it's boring. They don't want to talk about it, whether they have good credit or because they have bad credit, so they just want to ignore it. But so how I got into credit. So the only thing my parents ever told me was, my dad said, once you turn 18, you need to get a credit card. So that was the extent of my credit advice. That was my credit education growing up. And so as soon as I turned 18, I got a credit card, which was great. That was great advice. but he didn't say how to use it, how to pay it, what to do. Don't get too many cards. Don't do this. So I just really, when I was in college, I just really wanted to know about credit. So I studied credit on my own throughout college. You know, the FICO 5. You can Google that info.
Were you a finance major?
No, I was not.
So it started from like a passion.
Yeah, it was just interest. You know, how like I knew that credit was important.
Yeah.
And I was like, well, how do I have the best credit? I want to have, you know, the highest score. What is the highest score? I don't know. What's the lowest score? So I started researching. Yeah. A lot of my credit cards would have like your, you know, a version of your FICO scores and be like, yeah, your FICO score is a 720. I was like, wow, that's awesome. And it would have like the pie chart of like how your credit's broken up. And so I would study that stuff. I would read their tips and all that stuff, which is basic info. And some of it's accurate, some of it's not so accurate. Right. But I played football at Westchester and I ended up getting injured, tore my shoulder, my AC joint and labrum, and had to have surgery. And right after I graduated, a couple of medical collection accounts ended up showing up on my credit, which I was not legally liable for. I had my parents' insurance and the school had secondary insurance. So, you know, I just figured they would be taken care of. Ended up a couple of them weren't. And then I got an alert from Credit Karma, which I've had a Credit Karma account for over 10 years now. Right. And we'll talk about that a little bit more a little bit later. But it is good for alerts. It let me know. I got an email, hey, there's a new collection. And I was like, you know, I just graduated. I took care of all the bills at my, you know, with my roommates and stuff. So I knew everything was paid off when we left. I knew that we got a whopping $80 back from our security deposit. So I knew we didn't owe money. And so as soon as I logged in and said medical, I knew exactly what it was. I said, oh, okay, the school will take care of this. This is no big deal. I don't have to worry about this. Just got a car. I'm good to go. Not true. So it took 11 and a half months to get those two accounts off of my credit. And during that time, then I went into, you know, overdrive of studying about credit. And
so these were medical bills that were supposed to be paid by A, your insurance company, B, the school's insurance company. Correct. And did they not get paid, or were they paid late? Or
well, most of everything got paid. Obviously, It was a surgery. It was like $20,000.
Right. And so this was stuff that you weren't responsible for. They just fell through the cracks. So this wasn't something that you had to pay, and it did eventually get paid. But in the meantime,
not by me. Correct.
Everything was fine. You know, you got the surgery. It got paid for. But what ended?
A couple of things didn't, obviously.
Right. But what suffered was you still got dinged on your credit report. Though,
right.
Or your credit score.
Yeah. So when you have surgeries, it's super confusing, and I know that firsthand. You know, you get bills from the hospital, you get bills from the doctor's office, you get bills from the anesthesiologist, you get bills from all these different people and companies, and so it's confusing. Like, well, the hospital already got paid. Yeah, but the doctor didn't. Okay, now the doctor got paid. Oh, but the anesthesiologist didn't. Oh, it's like, well, is there anybody else? Like, who do I owe? Like, is this taken care of? But anyway, so it is very confusing.
You don't know what bills are being taken care of and what aren't.
I just collected them, dropped them off at the school, thought everything was taken care of. Not a big deal. So kind of made me a little upset, you know, after a couple months, and it was still wasting my time. I had to call the school's insurance, my parents' insurance, the debt collector, the hospital, and it was consuming a lot of my time. So I really started to study the laws. I said, well, how is this legal? And so I started researching for consumer protection attorneys to talk to somebody like, can an attorney help me get this resolved quicker? Did they violate my rights under the Fair Credit Reporting Act? You know, what's going on? So I started studying and studying and studying.
What did you find when you reached out to attorneys?
Well, I found that it was super hard to find any attorneys who specify in consumer protection law. It was very hard. I spent quite a few hours just searching for those. There's not too many.
Well, from their end, there's probably not a lot of money in it.
That's what they think, right. Which is why there's not so many. But there's a lot of money. The credit bureaus are all multi-billion-dollar corporations. They have plenty of money. They screw up. They report inaccurate and unverifiable information. They report inaccurate dates all the time. They change dates. They do a lot of things that they're not supposed to, being that they are a data company. Right. They should have accurate data, and they don't a lot of the time. So there's plenty of money to be made. Some of the cases that I've helped with my attorneys have been well over six figures.
Right.
That doesn't mean the consumer gets that, but the attorneys.
But the idea of like hey, there's a college kid that called up. He has some medical bill issues.
Right. They didn't really care.
Yeah, it's not a
They're like, well,
thing.
did you go to the hospital? I was like, yes. Did you sign any paperwork when you went to the hospital? Well, yeah, I had to.
Yeah.
Well, then you said that you were liable for it if the insurance didn't go through. So technically, I didn't have a case. And okay, fine. So it still was making me mad. 6 months into it, I had spent multiple hours on the phone trying to resolve this. I didn't have plans of buying a home anytime soon. I just graduated. But after 6 months, I was like, all right, this is ridiculous. It should be resolved. I don't owe this. What do I need to do? So I was doing all the work.
Right.
And so I just started listening every week to 20 to 40 hours of credit experts, paralegals, lawyers, credit experts, nationally recognized credit experts who've worked for FICO, who've worked for the credit bureaus, and they teach classes and charge a lot of money for these classes. So I bought a bunch of them and just really started to study about credit. And then
because most people in that situation, they get their hospital, they get their something happens, the bills are covered by insurance or whatever, their credit gets dinged, they go to get an apartment or something,
right.
And
they find out then.
And basically, it just comes this like whole conversation with the landlord, like, yeah, my credit score is not great, but it's because of these medical issues and this medical bills. And some landlords are like, okay, other landlords just don't even look at it because they're just looking at that number. But I mean, it's almost you're unique in that situation, in the fact that you actually looked into it when most people are just going to just let that sit for 5-10 years until they actually need that, or they just get by without addressing it at the time, and now it's following them along.
Yeah, well, so I worked for a company doing Medicaid and Medicare appeals and reviews, and I worked remote, so I was able to listen while I was working to literally 20 to 40 hours a week. I was working overtime, so I was working 60 plus hours, and I would just listen to it all the time. But I knew, being in that industry, that there's a 2-year time frame for insurance claims. So I knew that it had to be resolved. Otherwise, it would be my problem, and most people don't know that. Also, I only knew about it because I got an alert from Credit Karma. Most people nowadays, millions and millions of people use Credit Karma. Do they actually check it? Who knows? Probably right before they want to get something. And
I mean, that's my fear. It's like I get so much random junk mail and junk email. Like, if someone was trying to tell me something important, like, I don't know if I'd get it.
Right. Yeah. So, I mean, I was different. I was always proactive. Like I said, I cared about my credit. I knew it was important. I knew when I got my vehicle, it was super easy. It was a great interest rate because of, my credit diligence. So that just reinforced it. And then, a couple weeks later, I get an email saying that there's a collection. I'm like, well, what do you mean? So the fact that it took a year to get it removed from my credit and I didn't legally owe it kind of made me think, well, how do these debt collectors and credit bureaus, how do they treat people who do owe these bills? Because it was not a fun experience. The debt collector was not the best. I really didn't talk to them much because I knew we wouldn't get much resolved except yelling at each other, that I didn't owe it. And they hear that every day. The credit bureaus receive over 12,000 disputes every single day. 12,000 a day. 12,000 from consumers or credit repair organizations. And so they hear all the time, oh, this is not my account. I don't owe this. This is paid. Insurance paid this. They hear all the excuses. And they're just like, okay, sometimes they remove them and sometimes they don't. So I didn't even do a dispute. I didn't even know enough about credit back then that I had the right to send in disputes to the credit bureaus and challenge these accounts to get them removed myself. So I did no disputing during that 11-month period. I did eventually know that I could, but I just was like, well, that's going to get resolved, and I want to see it get resolved without me sending letters to the credit bureaus. So eventually, the hospital got paid by the secondary insurance, and they said, oh, well, we're not going to remove it from your credit report. And so I'd been listening to a lot of attorneys, and I said, well, my counsel said that we would have to file a lawsuit against the hospital and the debt collector because the hospital told them to report inaccurate information on my credit report. And then the next day it was removed from all 3 of my credit reports, and they said it would take 30 to 45 days. So I knew right then and there that it doesn't have to take 30 to 45 days to get items removed. And that's when I really was just like, well, It's not fair. It's not fair to people. So I started helping friends and family, friends from college, family members, just disputing items that were theirs, that they did actually owe. I wanted to see how the industry worked. Started sending out letters for quite some time. It was probably about 6 to 8 months of me just disputing, writing out letters, basically for fun. Basically,
right, because you were working at your other job at the point.
Right. Yeah. So it was, just minimal time,
right,
and doing that. And
well, you get to this point where you've spent so much time learning something and you get so good at it, it frustrates you not to try to help other people.
Yeah. And, I like to help people. I have a big heart, so I like to help people. And Absolutely. So I was just like, all right, well, let's just help my friends and family. And then eventually people started calling me, and I didn't know who they were. So I was like, well, I have to charge you something. And so I called credit repair companies all over the place, the biggest ones. How much do you charge? And I just cut the price in half, did half off. Oh, well, I'm just going to undercut these guys. Right. You got to start somewhere, right? And I really didn't know exactly what I was doing. Okay. Mm-hmm. And that's fine. Of course, whenever you start doing something,
you know what you were doing. You just didn't know how to structure it most efficiently.
Right. I didn't know what would happen. I didn't know the results. I didn't know that you could get an account removed and that it could come back later, and with a different company. It's like, well, we got this removed. Well, it was sold to a different company, and now that company is reporting that you owe the money because guess what? You do. But it was a game. It's just a game. So we were writing letters, disputing it, getting the account off, and it was fun for me. So eventually started helping people part-time, super, super part-time, just helping people out. And then at the job I was doing, once the Obamacare or the ACA, you can edit that part out, the ACA, the Affordable Care Act went into full force. My company went from 2,000 employees down to 1,000 over the course of a few months. So there was a total of eight layoffs while I was there. Kept cutting, and I kept getting transferred to different departments. And then eventually I was laid off in May of 2015, and I was ready to go at that point. It had been a few years. I'd been doing credit repair part-time. I had hundreds of hours of studying from professionals. I knew a lot more than most people about credit, and I was ready to do credit full time. I like it. I like helping people out. It was awesome. The first person, actually my uncle, helped them fix their credit. He was working with Lexington Law for 30 months consecutively. So he spent almost $3,000 to them, and he still couldn't get approved for a mortgage because they don't provide education. They don't provide credit education. They didn't tell him, well, hey, you need a credit card. They didn't tell him, oh, your credit card's maxed out. All you have to do is pay it down, and you're going to get 60 points, and then you can qualify for a mortgage. They didn't tell him, oh, well, these accounts are marked as disputed. That has to be removed, and then you'll have no problem getting a mortgage. They don't explain stuff. So I literally helped him for 60 days, got a couple more accounts off, told him to pay down his credit cards. He did. Boom, got approved for a mortgage, and that was awesome. That was amazing. Not only was it family, it was helping somebody achieve their goals, especially when one of the biggest companies in America couldn't do that. Right. So that just kind of reinforced it. And I was ready. Right after that happened, I was ready to do credit repair full time. I was like, this is awesome. It's so rewarding, and let's do this. And then I got laid off, and that was it. Right. So I've been doing it full time for almost 3 years, but I've been doing credit repair for over 5 years.
Okay, gotcha. Yeah. So real quick. So going back to when you're just helping out those friends, and you're at a point where you're trying to guide people and try to help them along. What was some of the advice that you were telling people? What can someone do? How can someone increase their credit score within 30, 60 days? What do they need to know, and what actions do they need to take?
Sure. So most important thing, if you have a credit card, which you should, if you want to have good credit, you need a credit card. Okay. So I'm going to assume that you do have a credit card. You just don't know how to use it. And it's only $500. No big deal, right? Oh, yeah, well, I only owe $400 out of $500. That's not a big deal. I can pay that off right now. Who cares? Well, the mathematical algorithm from FICO cares, because you're overextending yourself. You have one $500 credit card and you're using $400, when in reality you should really not go over about $100 or $150 max. 30% is the rule of thumb, but we tell people when you're trying to get a mortgage, if it's possible, pay off all your credit cards except for one and have that credit card at 10%.
Okay.
or lower, or 10% of your cumulative balances. So that might be hard for somebody who has $20,000 available in credit and they owe $6,000. Okay, well, you don't have to get it down below $2,000. That's a lot of money, unless you can. When you're getting a mortgage, I mean, ideally, it's a 30-year mortgage, and you're going to be there for normally at least 8 to 10 years, if not longer. You want to have the best credit score. You know, I deal with a lot of loan officers, and they're like, well, they can qualify. They have a 585. Right, but that's terrible financial advice to give to somebody. Oh, why don't you just squeeze by with the bare minimum and get a mortgage at the worst rate and pay $20, $30, $40, $50, $100,000 extra in interest over the course of this loan? And I understand it. I'm friends with a lot of loan officers.
Right.
They have to make money and they have to close deals, but that's terrible, terrible advice.
Because they want to close the deal right now. They don't want to kick it to credit repair because they might never see that person again. And some people, they want to move right there and then.
There's definitely some situations where you have to move.
Yeah.
You know, if there's a PFA for abuse or something like that, and the person's still coming around, or if you're in, an apartment with a slum landlord. I have a lot of clients in Philly and they're complaining, well, there's water in my house. There's leaking from the I need to get out of here. And so there are absolutely situations where you need to squeeze by with a 580.
But if you have the luxury of the time and flexibility, it's always a better idea, for the most part, to at least get that credit score higher, under control, in a reasonable zone, because that's going to affect the long-term cost of that loan, how much, the long-term cost of that home, the house. Right.
And normally, for most situations, you can drastically change your credit in a few months, for most people. Not everybody. Some people have been through a lot and it might take a while. But most people, if you give it 3 to 5 months, you can change it completely. You can go from a 580 to a 650 easy.
Okay.
In most cases.
So the optimum place to be, you would say, is one credit card at 10%. At a 10% balance.
10%.
So the person who has a $500 card and $400 on it, would it make sense for them to get a second credit card and put $200 on each if they, or like to spread it out, or is that?
So I mean, it depends on their time frame.
Yeah.
If you're trying to get a mortgage in the next 2-3 months, you should not get a new credit card in most cases.
Okay.
Because you're opening up a brand new account. That lowers your credit score because your average age of credit decreases. They have to see that you're paying this new account on time. But that could happen. It's really cumulative. So I don't care if you have one credit card or 5, it's still the same. If you have one that's $500, you should be at $50 or lower. If you have 5 that are $5,000, you should be below $500. And I don't care if you have 100 on each of them.
Okay.
Or 500 on one. Now, debt to income does care about that.
Right.
So from a mortgage standpoint, to get the best debt to income, every card that you owe money on, there's going to be a small payment assigned. So it might be 25, 25, 25, 25, 25. Well, just owe 500 on this one, and now you have $100 extra reduced from your debt to income. So it's strategic as well, but generally that's the answer.
Okay, cool. So let's say someone is in a point where they need to get that credit score up. Maybe they're not buying a house. Maybe they're trying to get a job or something a little bit more immediate. What are some of the other actions that they should be looking at? Or what other actions, whether they do it or a credit repair specialist does, would start affecting that score?
Sure. So if there's negative accounts, if there's old medical bills or utility bills or rental apartments or credit cards, store credit cards that you opened up and you just didn't pay because you thought that they might not, who cares? It's a store credit card, doesn't affect my credit. Not true. Absolutely does. Medical bills, myth. People think they don't show up on credit. Not true. They absolutely do.
Right.
The confusion with that is loan officers will tell them, well, we don't have to include medical bills in your DTI. Right, gotcha. Which is true. You can't control if you have to go to the hospital and you owe $10,000, and you shouldn't be punished for it. I agree with that. But what they don't normally explain is, but you should probably try to get that stuff off your credit because it will absolutely impact your FICO score.
Gotcha.
Now, if you're not trying to get a mortgage and you want a quick boost, ask a friend or family member to add you as an authorized user to one of their credit cards. Okay, now some people are like, well, I don't want to ask people for that. That sounds like a lot. It's not a lot. It takes 2 minutes. Yeah. You either call your credit card company or log in online, just like you go to pay it, add someone. All you need is their name, maybe birth date, maybe last four of their social, and you hit submit. Okay, unless you have a subprime card, a bad credit card, they're not going to charge you.
Yeah.
They're not going to pull your credit. There's going to be no damage done to you, and it's only going to benefit that person. Now, I said if you're not getting a mortgage, you can do that. The reason is, and sometimes it works for mortgages, but a lot of times nowadays it doesn't. Mortgage industries went through this thing, 10 years ago. It was called the crash. Right. So they are super strict.
Very familiar with the 07, 08, 09 crash.
So, they're very strict, and they know that when people are trying to cheat the system. Mm-hmm. And so most mortgage companies, when they see an authorized user account, especially if there's two or three of them and you have none of your own credit, they know you only did that to generate a score because you don't have anything.
Gotcha.
And so unless it's somebody who's co-signing on that mortgage, most mortgage companies, not all, we've done it successfully with certain companies that don't look into it that much, and but they'll normally exclude that unless it's your wife or whoever's going on that mortgage with you. Then they can't do anything about it because, well, that's the co-signers, so they're actually applying for the mortgage, so you can use the benefit of them. But if it's a friend or family member or somebody you don't know, people sell trade lines. There's a whole industry out there where they sell authorized users. You could pay $500 to this company or $1,000 and get a 20-year-old credit card that's a $20,000 limit, and you can be added to it for a whopping 45 days, just so you can apply and cheat the system.
Is that legal?
So it's a very gray area.
For now, maybe.
So nobody's ever gotten in trouble for it. It is that I know of. It's a gray area. Some people in credit recommend it. Some people don't. Just get a friend or family member to do it. Then there's nothing wrong with it. I don't care if you pay them.
Right.
Great. You know them. You personally know them.
We should, maybe now's a good time to mention that neither of us are lawyers. And so none of this is actual legal advice. So just kind of putting that out there.
Right. Yeah. I mean, you can do whatever you want. One thing you don't want to do, so a credit repair scam, and I have to talk about this real quick, is called CPNs, or credit profile numbers, or credit privacy numbers, or SCNs, which are secondary credit numbers. Basically what they're doing, that is illegal. People have gone to jail for that. Don't do it. I can talk about it more, but just don't do it. You can't create a new identity. That is called identity theft. That is illegal. You are using somebody else's information, normally a deceased person, and they find it, I don't know how, on the black market or whatever, and they change your social, they change your birth date, they change your address. No, don't do that. Unless you move, then you can change your address. Your birth date should never change. Your social security number should never change. And their argument is, well, on the FBI website, it says that it's legal and that people use it for witness protection. Great. Are you in witness protection? No. Okay, then don't do it. It's also legal to make money if you're a bank, right? Right. If you're not a bank, it's illegal, correct?
Yeah.
Okay. So you can't do it in your basement, no?
Right.
Oh, that sucks.
Right. So not to go on too big of a tangent,
exactly.
But you slipped something in there. You said bad credit cards, subprime credit cards. Like, how do I know if I'm getting a bad credit card or not? Should I go,
right. How do you know?
What's a good one?
Well, if you have bad credit and you're getting solicitation from credit card companies, they're, Credit One Bank, Merrick Bank, First Premier Bank is terrible. As soon as you get a First Premier credit card, you already owe $150 or more. Application fee. Well, now you're maxed out. Like, what's the point? Now you just have to pay it down. Okay, fine. But most of my clients end up not paying it down because they're mad that they didn't know, because they didn't read the terms and conditions. Interest rate is kind of a factor. If you look at it and it's at 29.9% interest rate, probably not a good idea to get that credit card unless you're awesome and paid off every single month 100%. Then it doesn't matter. People do complain about interest rates.
Aren't all credit card interest rates bad?
Yes. But 29.9 is the worst I've ever seen.
Okay.
But like a credit union, if you have good credit, you can get it at like 9% or 8%.
Wow. Okay.
It's not so much anymore, but it is possible to get credit cards that low, but you have to have excellent credit. And is there a site or anything you have where you can recommend cards? On our website, we offer secured credit cards for people building credit. So people can go to our website, coultercredit.com, and there's a tab, Get New Credit. And you can click on that, and there are credit builder accounts. So there's credit cards where you put a security deposit down because you have to establish credit some way, and they will approve you for however much you give them. So that's where people should start if they have no credit and they don't have any friends or family members who are nice enough to add them to one of their credit cards.
Right. Cool. All right. Well, man, I could ask a million questions, so I'm trying to make this somewhat timely. That I think really helps, honestly, because I think it kind of gives us an idea of where to start, what's going to lift the first couple steps, and also where the eventual goal is. Because you hear a lot of stuff, if you just read magazines and short little articles, they're like, well, you want lines of credit, but you don't want too much. Okay. Well, you want credit cards, but you don't want too many. I'm like, all right. You want some debt, but you obviously don't want too much. And I'm like, geez, where to even go? So now you do a lot of education, and this is kind of why we have to cut it off, because there's so many different, like you said, you spend 20, 40 hours a week just listening to this stuff. You do a lot of workshops, right? Mm-hmm. And usually in the workshops, what kind of things do you cover there?
So usually it's first-time homebuyer events. I do lunch and learns. I teach, real estate companies and loan officers about credit as well. That's kind of a different angle. But for the most part, I mean, even loan officers and realtors just don't understand credit. They run the numbers. The computer tells them qualified or not, and they don't understand how the math works behind the scenes. So, I mean, we always just educate about the FICO 5. Mm-hmm. How is your credit score determined? There are 5 factors. And we just go over each one and just, kind of dispel some myths, because there's myths regarding all of them. And just try to really educate people on how important it is to obviously pay your bills on time and to have a credit card, not max it out, keep it super low, and, open up some accounts, make sure, So there are, like you said, how many do you have? So I did training with John Olsheimer for a credit expert witness class last August, and I'm going again this year. He has it every year. He worked for FICO for 5+ years. He worked for Equifax for 5+ years, and he's nationally recognized credit expert. He's used in hundreds of lawsuits. Mm-hmm. To defend the credit bureaus. Actually, he works for them. My lawyers work against him, but he's still a wealth of knowledge. So I go to his classes, and so he showed us his score for our class. He got up to an 850 credit score, and that's where we kind of learned that you want to have one small balance, ideally honestly, to have an 850, you want about 1 to 3% credit utilization on one card, and the rest paid off. Mm-hmm. So that's super, super hard to do for most consumers, unless you have maybe $100,000 in credit available to you. Then it's not so hard, but most consumers don't. If you guys have any questions, you're available. The best way to get a hold of you, is it phone, email, web? Your website's coultercredit.com, right? Which is COULTER credit.com. They can start there. They can read about credit. They can see our prices and everything, get some new credit. They can contact us there. Our office number is 610-350-4683. They can call, schedule an appointment 24/7. We have someone who answers the phone 24/7. They can schedule an appointment to talk with me, a free credit consultation. They do have to have a credit monitoring account that shows all 3 reports, so not Credit Karma. We didn't talk about Credit Karma, but they are not FICO scores. They're not scores that banks use, and that's all I'm going to say, because we're running out of time.
Yeah, absolutely. All right, well, there you have it, guys. Check out coultercredit.com. Ramsey's, he's the man when it comes to building your credit. And there's so many things we didn't get to. We didn't get to the FICO 5. We didn't get to the problems with Credit Karma. And then we also didn't talk about business credit, which is something that I definitely, we definitely need to talk to too. But he can help you with personal lines, business lines, getting those secured cards, getting that right credit score. Go ahead and contact him if you're interested in that. And we'll see you again soon.